If you haven't filed your tax return in years, maybe it's been a year, maybe it's 3 years, 5 years, or even 10 years or more, you may be afraid to even look at your mailbox because of an IRS letter or notice that you receive. And if that's the case for you, this video is for you. Every week, I work with taxpayers who have not filed all of their tax returns. And the good news is we're able to get you back on track. You're going to have to just own up and get started. And what I'm going to do today is I'm going to walk you through that process. What can happen if you don't file your tax returns and what you need to do to get back on track. So, one of the things that we find happen to taxpayers who don't file their tax returns is the IRS files a return for them. It's called a substitute for return or an SFR. And what happens when an SFR is filed is that the IRS takes the information they have available and they file it for the tax return. Now, what happens there is they have income information generally. They have W-2s, they have 1099 information. So they have this income information and they're going to file it based on that. If you are a small business owner, you are self-employed and you have business expenses, IRS doesn't know about those. You're not getting any of those. You're likely going to end up in the worst filing status with no dependent deductions if you have dependents, with no credits that you may have earned because the IRS doesn't know if you qualify, and you're going to end up with a tax bill based on that. And what we often see, especially once again for self-employed people, is it's substantially overstated due to all of those reasons. Um, but here's the thing, you can deal with that even if a substitute for return has been filed, although it's easier just to do it the right way. And once you file those returns, once you get into what is called compliance, where the last 6 years are filed, you can now then begin to resolve your tax issue and enter into different resolution options. So let's talk a little bit about how many years you actually have to file. Well, most people think they have to file every return. However, the IRS policy is that typically, as a taxpayer, you're only going to need to file the last 6 years to get into tax compliance. And that means that once those are filed, you can begin to resolve your tax problems, set up a payment plan, file an offer and compromise, and so on. Why does the IRS do that? Well, they do that because they know there are taxpayers out there who have not filed in a long time, and they want them to get back on track. And they realize they may never come out of the shadows. They may never get back on track if they don't give them the ability to do that. So that's what the 6 year that 6 year filing requirement is. It's policy statement 5-133. The IRS can't go beyond that. They have to get managerial approval, and they normally only do so in the worst cases. But in most cases, what you're going to see is you only need to file the last 6 years of returns to get back in compliance. So what if you can't pay? And that's where most people freeze. One of the things I see is a lot of small business owners, they know they're going to owe, so they decide, hey, I'm not going to file. And if I don't file, the IRS doesn't know. But like as we already discussed, the IRS can file a substitute for return on your behalf. And if you don't file, you're going to incur an additional 25% penalty for late filing. So you want to file even if you can't pay. Here's the other thing. You can't even begin to negotiate with the IRS to find a settlement until you get into tax compliance. So that's why one of the reasons you do want to do that. And you want to do it without an SFR because you want it to be an accurate amount, the lowest amount that you qualify for. And so once you can do that, now you can start to resolve the tax issue. Now we can look into, do you qualify for a payment plan of some sort? Maybe what the IRS wants you to pay, or maybe you qualify for something better. Maybe you're currently uncollectible. Maybe you qualify for an offer in compromise or a settlement, or maybe penalty abatement is an avenue for you. Those are all things you can explore once you know what you owe and what's out there. But remember, the first step is compliance. The second step is the tax resolution. On the other hand, what makes it worse? Well, what makes it worse is ignoring it. You're going to end up with that penalty that's a late filing penalty that I talked about. You don't want that. It's unnecessary. You may end up with an SFR, as we talked about, where the IRS is filing on your behalf, and you're not avoiding penalties and interest. All of those penalties and interest are still continuing to accrue. And the problem, as we spoke about earlier with an SFR, is you may be paying them on a tax that you really don't legitimately owe. So get it filed accurately, and then deal with the resolution portion of it. So we talked about what you shouldn't do. Let's talk about a real simple, high level basic structured plan. I'll be digging more into this in a future video, but for right now, let's start high level what you need to do. The first thing I'd recommend is you pull your IRS transcripts. You can do that yourself through an IRS account, or you can hire a professional to do so. Those transcripts, you're going to want at least two of those transcripts. Transcript one you're going to want is an account transcript, and transcript two is a wage and income transcript. The account transcript will tell you a few things. What years does the IRS believe you filed and not filed? So that you know how many years you have to file. You'll also be able to see there, has the IRS filed a substitute for return on your behalf? So you'll know if something's already been filed, what the IRS thinks you owe for that year, and whether you need to file a return to override it because you don't owe that amount. The other transcript we talked about is a wage and income transcript. That's going to be all of the income reported to the government on your behalf. W-2 income, 1099 income for business income, maybe 1099 income for stock trades or dividends or interest, all of those things that are being reported to the government. Helps you with two things. One, 6 years later, or how many ever years later you're filing that return, you may not remember all of those amounts that you receive. This will help you to identify everything that you need to be reporting on your return. It'll also help you avoid surprises on the back end, because the last thing you want when you file your return is to start getting notices that you didn't put everything on the return and the IRS is auditing you. That's not the next thing you want to go through after you do this. So make sure you get the returns filed accurately. If you are a business owner, make sure you also go back, get those bank statements and credit card accounts. Get your expenses identified so that you don't over-report your income. Um, after you do this, you can now file your return and you can start to resolve your tax amounts that are owed. You can look at, do I qualify for a offer and compromise, a settlement? How about penalty abatement? What's a payment plan look like for me? What's the IRS going to want in the standard plan? And what, based on my financials, can I qualify for? You can start to do all of those things. But remember, step one is get in compliance. Step two is deal with the amount that's owed. If you're in this situation, if you have unfiled returns, I'm going to put a link in the description below. Reach out to me. We could get a free consultation for you to get started to come up with a tax strategy and how to get you back on track. Like this video if you enjoyed it. If you have an IRS problem, whether it's unfiled returns or other tax issues, subscribe to the channel, okay? So the important thing, and I'm telling people this every day when I talk with them with unfiled returns, you're not alone. It can be fixed, and it's something that's very solvable.